Good morning, traders. Nick Massandrino, Market Tea Leads, here to bring you our daily market bias video for Wednesday, June 18th. It's approximately 6:15 a.m. on the East Coast. We're going to take a look at the overnight session. Asia closed mainly to the downside with the exception of the Japanese Nikkei exchange and Singapore, which closed fractionally higher. Currently right now in Europe, and this is current and ongoing, all of Europe is trading to the upside. So we're going to take a look at the futures for the U.S. markets, mainly lower, with the exception of the NASDAQ, which is fractionally higher. Now we're going to take a look at market correlation as it stands. U.S. dollar is trading down, so trading down pretty much all morning long. Energies in terms of crude is trading higher. There is correlation between the U.S. dollar and crude as it is riding. Financials, in terms of the bonds, are trading higher. And the indices right now are pretty much mixed, if you will. The S&P is down, one tick. NASDAQ appears to be trading higher. Dow Jones Industrial Average down fractionally. So basically it looks as though it's going to be a mixed open, at least as of this broadcast. Metals, in terms of gold, is trading down. Now, if we were to take a look at the economic news that's on the docket for the U.S. markets today, basically at 10:30 a.m., we have crude oil inventories. This is usual and customary for Wednesday. At 8:30, we have current account, which is not considered to be major. But the main news of the day is going to be the FOMC meeting. They're adding a couple things that, historically speaking, they very rarely ever do. They're reading economic projections, which is not usual and customary for them. I think it's probably the first time they ever did it. And they're also, at 2:30 p.m., they're also going to be having a press conference. Now, typically, whenever they have a press conference, it means that something major is brewing, or something major is coming up as of this meeting. Now, what that is, it's hard to say. My take is that no likelihood, I don't think they're going to raise interest rates. What I do think they might do is slow down tapering, if you will, because since December, they've been reducing quantitative easing by about $10 billion a month after month. I think that given the weak numbers coming out of the housing market, what they might do is maybe slow that down or cut that in half. Again, that's pure suggestion on my part. Time will tell if that is true or not. All in all, our bias is neutral. And for those of you who've been around market tea leaves for a while, you know the reason why. Typically on FOMC day, our bias is always neutral because the markets have never shown any sense of normalcy on this day. This being said, I mean, if trading today, I would do it with my eyes wide open because some people are going to look at this market as half full, the others half empty, which could add a lot of whipsaw into the market. So something to be mindful of trading. Thanks. Hope this helps. Look forward to the next time with you.